Hey everybody, it's Wayne. Thanks for joining me this Memorial Day weekend. I hope you guys are having a safe and fantastic holiday. I'll go ahead and start the video off with a saying that I should have remembered this past week when I began to experiment with different types of options. Wayne, stay in your lane. Wayne, don't go chasing waterfalls. Wayne, if it ain't broke, don't fix it. I wish I would have heeded that advice before I began entering contracts to include a call credit spread as well as a put credit spread. So before we go ahead and get into my epic fail of the week when it comes to losing money, I want to point out real quick my stats for 2022. You guys will see in 2022 I made $52,000, and that was between selling 596 contracts for covered calls and 247 cash secured put contracts. So in total, 52,000. I want to show you guys here some important stats. If the name of the game with selling options is to not be assigned, I think these stats paint a realistic picture. And you can see here, only 3 times out of the 596 contracts that I wrote last year, only 3 times was I ever assigned either early for a loss or assigned early for beginning. So that's going to be 5. 5 out of 596 equates to 1%. If we look at how many times I was able to profit on those contracts, whether the contract expired, whether it closed out early, or I later roll close and then close out early, that was 98% of the time I've been able to be successful with covered calls. Let's go ahead and take a look here at cash secured puts. Same thing. If we look at how many times I was assigned early, I'm not going to lie to you and tell you it was never, right? It was 13 times, but that still equated to a total of only 5% out of all 247 contracts. Once again, even with the cash secured puts, by and large, those contracts either expired, closed out early, or roll closed. The closed out early is the big one. You guys know I like to lock in profit as soon as I can. So to be able to lock in 52% of the time I'm closing those out early for profit, that's pretty fantastic. We throw in expired and roll close. That's 93% of the time with cash secured puts that I've been able to be profitable. Let's go ahead and tally all 843 up. And again, guys, we do have a few in which I was assigned to expiration. That's not a bad thing. There might have been a time where maybe I wanted those shares to get called away, or I wanted to buy 100 shares. The big one that I want to point out here are the contracts in which I was assigned early or assigned early for a loss. And that's my mistake, because that means I obviously sold below my cost basis when it comes to covered calls. But again, if we tally up 843 contracts, 8% of the time those contracts expired worthless. 64% of the time I was able to close out early, which means I locked in profit. And then 25% of the time I did have to roll close, but that means that they either were closed out early after that or they expired. But for the most part, 97% of the time last year, I was profitable. I bring that up because that should have been what I told myself before I began to experiment with entering call credit spreads as well as put credit spreads. I don't want to get too much into the weeds with what a call credit spread is and a put credit spread. I will just say this. There is fantastic content out there. You guys know that Brad Finn, I just look up to the guy because I learned so much from his channel. And he also has rather fantastic content when it comes to those types of spread options. I'll tell you right now, moving forward, I don't know that I am going to be doing too many more of these. And it really comes down to a big loss that I experienced this past week with AVGO, the Triple Qs, AMD, and I also think, AVGO was also a loser when I tried the Iron Condor. Let's just go ahead and break down AVGO. And you guys can see here, when I entered that call credit spread, I had to have only collateral of $500. And to me, that was like a winner because, and again, we'll just show you real quick what AVGO looks like. We'll give you guys just a quick example. So let's say I want to sell a covered call for AVGO, but I do not have the 100 shares. Well, then I'm not going to be able to enter that contract. Let's say I want to go ahead and sell a cash secured put, but I don't have the $80,000, the $70,000, the $60,000 in collateral. When you enter either a call or a put credit spread, it allows you to have a lot less collateral. Now you're going to cap the amount of premium that you're going to receive, but you're also going to set a very, very determined loss amount, and it's not going to be in the thousands of dollars. It could be, but it's not going to be. So let me go ahead and just show you real quick. Let's say next week, I think that AVGO is not going to go up to 820. Now, currently the share price for AVGO is $811. And so I don't think it's going to go up to $820. And so if I had the 100 shares, I could sell a covered call and I would make, boy, $3,045. I don't have the 100 shares. And so what I can enter is a call credit spread. So we're going to go ahead and quickly do that. And it starts by selling a call, and then you're going to buy a call. And when you do that, Robinhood automatically knows that I'm entering into a call credit spread contract. Now notice the maximum profit that I'm going to make on this is $385. That's a lot less than when I was going to sell the covered call, making $3,045 in premium. That's because when you buy a call, you are paying a premium to enter that contract. So essentially, you are receiving the difference between the covered call and the purchased call contract, and that is going to be the essence of a call credit spread. Now, what the liability is going to be is the difference between strike prices. So that's the collateral. And you guys will see on your screen here, right? If I want to buy this contract, right, in which 830 is the strike price, and I want to sell this call, that strike price is 820. That means the most that I can lose is that $10 multiplied by 100 shares, which is $1,000. So if we take a look at the incoming premium, I will have received $385. But my max loss is going to be capped at $615. So I thought, man, this is awesome. I'm going to be able to participate in stocks like AVGO, NVIDIA, you know, these higher end stocks that I maybe don't have the money to buy 100 shares outright. Well, guess what? It turns out last week I absolutely got smoked when it came to AVGO. And AVGO, if we go back over here to the chart, they had an incredible, I mean, like a shattering number, right? This is where I was at when I sold this contract, right? And if we look here, let's go back to, I wrote this on the 19th. So let's go ahead and find the 19th on here. And we got to go back a month, right? So that makes sense. So when we look at the 19th, right, AVGO, right, Broadcom was $682. So I wrote a contract saying, hey, there's no way that AVGO is going to get all the way up to, and I'll show you guys here the history. There is no way that AVGO is going to go up to a 700 strike price, right? Not only did it go up to a 700 strike price, it went beyond 700, and as you guys can see, the current share price is $811. So this is my problem, and I'm not boo-hooing because I lost 500 bucks, but the reality of it is, in the past, when I have sold covered calls and things were going sideways, I could always roll to close those positions, and you guys saw that in my stats. That's something that I do rather often. You cannot roll in Robinhood on a call credit spread or a put credit spread, right? You can only buy to close out that position. Now, the maximum that you can lose is, quote unquote, only $500. But this kind of goes back to, Wayne, it's the same thing with the cash secured put. Yeah, you have been assigned early on a cash secured put, but guess what? You now own something tangible. You have those 100 shares that you can turn right around and sell a cash secured put. Now I'm going to give you guys here an example. So AVGO, Triple Q, AMD, all of these guys I lost because the strike price was exceeded. Now, if I were selling a covered call, yes, that means I would have, of course, in the beginning, have to have had 100 shares. But I go back to, I would have been better off just selling options on maybe a subpar stock, right? I know that we're not supposed to do that, but the reality of it is, right, you guys know, right, in the wheel option, you guys know that I own SoFi. There's no way that I'm ever going to sell it to you that SoFi is this great stock, right? It's a $5 give or take stock. But guess what? With those 100 shares, with that 500 bucks, I've been able to make a decent amount of money, right? And no matter what happens with the share price, I still own those 100 shares. Even though my cost basis may be $5 and the current share price, let's say, for example, is $3, guess what? The share price could always go back up. This money that I lost on AVGO, AMD, and QQQ, that's it, right? It's a wrap on that transaction. I will never be able to go back and get that $500 back. So that's why I don't think I'm going to participate in the future. Now, truth be told, guys, I do have a couple of more contracts open on the put side. Again, that's a put credit spread, something very similar. Think just like I showed you with AVGO, the covered call. Imagine if I were going to sell a cash secured put for AVGO. The same thing. I would not have to have that full amount of collateral. But again, the difference between strike prices, that's going to be the total collateral. I want to show you guys this one right here, which really bugs me, right? Which is AVGO. Essentially, right, yes, I received $83, but I lost $500. That's a net premium of $417. I want to show you guys here a transaction that I did in my Roth IRA. This will kind of give you guys a quick peek as to what to expect here with a forthcoming Race to 100 update. And if we scroll down here, notice that AMC, I currently own 100 shares. Let's go down to the history here and we'll see how this began. You guys will see that on the 26th, I wrote a cash secured put on AMC and I had a $5 strike price. And in entering that contract, guys, I only, right? I already know, guys, it's not a big amount. I only earned $10 in premium. Well, guess what happened? Sure enough, AMC did not finish higher than the $5 strike price. And I either had a choice to roll out that position, buy to close that contract at a loss. I made a decision to just let me be assigned those shares. And so if you scroll back down here to the history, you will see on Friday, when the stock market closed, the AMC closed out at $4.64. I obviously entered an agreement saying that I would buy 100 shares at the $5 strike price. So even though AMC is $4.64, I was forced to buy my 100 shares at $5 each. And so if we look at my cost basis, here you'll have it. It's, and why is it? Oh, that's the value. So my cost basis is right here, right? It's $5 times the 100 shares, but currently AMC is only going for $4.67, so I'm already down, right? I'm already bag holding at 6.5+%, right? I'm down $33, which again, we kind of go back to the amount of money that I was down from this AVGO, but here is the stark difference between doing something like a call or a put credit spread versus, right, me, right, playing games with this AMC stock, but I'm good with it. Because you want to know why? Even though I have 100 shares of a stock that I'm currently down, I still own those shares. I can still do something about it come Monday. And in fact, I can turn right around and I can sell a covered call. So maybe I'll go ahead and go out 2 weeks and I want to see if I can sell a covered call at my cost basis, which is $5 per share. And right here, guys, the first one, I can make $14 if I am willing to sell this contract, which is 2 weeks out. If I want to make a little bit more in premium, I can make $19 for that $5 strike. And where I'm going with this is if I compare that call credit spread that I did on AVGO, in which I took a total loss of $417, and I go back to the stats, right, of me selling covered calls and cash secured puts. Guys, I think I'm good at it, right? I mean, 90+% of the time I've been able to get a favorable outcome, right? I mean, the stats are there. This is why I'm keeping track of stats. And here, right, we have a couple of call credit spreads, and I also wrote some put credit spreads. And right off the bat, guys, I'm getting killed. But probably more important, I've got nothing to show for it because everything was for cash. Nothing involved the actual where I would take ownership of 100 shares. Or let's say 100 shares that I owned were called away, but I had share price appreciation, right? I had capital gains. And so that's why, you know, AVGO, a quality stock, guess what? I'm going to make more money selling covered calls on AMC than I would for, you know, messing around with a call credit spread. And it's not to say, right, that, and this week was crazy, right? I mean, I don't think anybody saw the stocks that we saw go through the roof, right? I think it kicked off with the earnings from Nvidia, and then that was like a domino effect. Nvidia went through the roof, then AVGO went through the roof, and then AVGO announced this partnership with Apple, so that increased it. I mean, I just can't. I never would have thought that AVGO would have saw the run up that it did. So there you have it. I lost, and if we look at just these 3 contracts that expired on the 26th, right? I lost. We're gonna look at this one as well because we have QQQ. So I lost $660 last week, and it's a bummer, right? Because I had such. If we look here at all of the contracts, let's go ahead and sort this oldest to newest, and we'll go to the covered call side as well. I sold some covered calls as well. Let's go ahead and sort this from oldest to newest. So let's take a look here at all the covered calls that I wrote this past week, and I'll scroll through this, and you guys can look at this and see stocks that might interest you. But for the week that began, and I got to pull up my calendar here as I'm talking to you. So the week began on the 22nd. If we look at the contracts that I wrote this week, just for the covered call, guys, I entered 18 contracts. That's a lot of work in a week. If we go ahead and sort by, once again, the week began on the 22nd, I wrote a total of how many contracts? So 23 contracts. So 23 contracts plus 18, right? So I mean, that's 40 plus contracts that I wrote in a single week. That was a lot of work to do. And so to see all of that profit just wiped away by 3 or 4 trades on a credit spread, on something I shouldn't have done to begin with. And if you guys are wondering why I did it, it's a couple of things. I was trying to experiment. If I'm being honest, the second one, I'm trying to preserve capital. Right now, my brokerage account, I think I've got just over 22,000 in there. Listen, when you've got 22,000 in your brokerage account, there's a lot that you can do in the form of cash secured puts, but you're not going to be able to participate in the big boy stocks, right? You're not going to be able to write multiple contracts on Google, multiple contracts on Amazon, multiple contracts on Microsoft, multiple contracts on Amazon, or I'm sorry, Apple. And you're certainly not going to be able to do that simultaneously. So that's where I was like, oh, I can still participate in these great stocks and not have to have the cash. So it didn't work out to my favor. So let's go ahead and give you guys here an updated tally. Take a look here, guys, before I update the covered calls as well as cash secured puts. My monthly total just for covered calls was at $14,025. The wheel stocks, which I'm going to get to in this video as well, I'm at 2,300. So that's a total. That's a combined total of 16,397. Let me go ahead and pause the video and update all of these numbers. All right, and I have updated the spreadsheet. I did that off camera because I have to essentially sort by month every time I roll a position. Take, for example, January. If you guys were to rewind the video, you will see that I did not have a total loss of 25,000 up until I did the update. That's because I had a covered call in January that I wrote, and I had to push it out much further in the year. Remember, anytime I roll a position, I will document that loss as to when I originally wrote that contract. That's why I never look at how much I made on a monthly basis. I always look at the total. And if you guys take a look here, a total of 323 contracts, I have earned $10,479. Take a look here, guys, and again, I go back to rewinding the video if you want. Take a look at the number of contracts I have written in the month of May. Let's go back and take a look at, I mean, that's a big number. It's 77 contracts. A big part of that, guys, and I talked about this on my last video, is PACW. I mean, I have just written so many cash secured puts that have resulted in success for me. In fact, let's just go ahead and sort alphabetically, and so you guys can get an idea as to how many contracts I have written on PACW. We'll go ahead and start from the very beginning when I wrote my first contract, May 9th. And if we scroll all the way down, a lot of them obviously have expired. I've got a few that are open. So I have written a total of, just in May, 30 contracts on PACW. I have earned $529 in premium. And again, not one of these contracts have been assigned to me. Again, it just kind of goes back to, I can't believe that I would have even bothered with the put credit spread, the call credit spread, when I obviously knew that PACW, it was a great time to write cash secured puts. It's still a good time. I don't know that you're going to see the significant premium that we saw when the stock first went south after earnings. But I mean, look at some recent contracts. I mean, just this Thursday and Friday, I wrote 3 contracts. Now, obviously, my strike price is nowhere near, right, $2. You know, $3, I think $1.50 at one point. I earned $20. So my strike price is a little bit higher, right? So here we have a $4 strike price, a $5.50 strike price, a $5 strike price. So even for this collateral, which is $1,400, right, I've been able to earn, right, $77 on that open premium. So I'm just so mad that $500 is wasted on ABGO when I should have just written more cash secured puts. It's also important to diversify as well. All right, so we've given you guys all of the updated numbers. So that's $14,750. Now, the nice thing about the wheel stocks, these will always update from the spreadsheets because I'm not keeping track, you know, when I earned this premium, you know, in February, in March, and April, right? I just want those grand totals here in that spreadsheet. So far, guys, for 2023, I'm at $17,122. I wish that number was closer to 18,000, but your boy was making some unnecessary changes in strategy, but that's not going to be happening. One thing I promised you guys last week, and again, I kind of look at it like, all right, I've got my SoFi stock, and we'll go to SoFi here real quick and get you guys just a quick look at that. And SoFi, you guys know that I bought 300 shares at $5.50 each share, right? So my cost basis on these 300 shares is what, $1,600, and I'm selling 3 covered calls every week. And you guys know with PayPal, we start getting into a higher price point, and you guys know that I bought 100 shares. My cost basis is $64.96, so this is tying up about $6,500. So I wanted to give you guys kind of a stock between the cost basis of SoFi, the cost basis of PayPal, and TQQQ is one that I talked about that's been very, very solid for me. I have never, ever been assigned on TQQQ. I don't want to say that won't happen, but so far, guys, knock on wood, I've been very, very successful. So I officially decided to make this a stock in which we feature every week on these weekly wheel updates. If we go back here to the cash secured puts, I was giving you guys a tally on PACW. Let's get you guys a tally here on TQQQ. Again, I wrote my very first contract March 3rd of this year, and since then I have written a total of 19 contracts. I have earned 532 times, and guys, with the exception of this one contract right here, I have been able to close out early, locking in profit every single time. So I am very optimistic with TQQQ. It's not to say, because it is a leveraged stock, you guys need to know this. I talked about this. This is not a stock that I want to own, but I've got no problem with selling cash secured puts, conservative cash secured puts. You guys, and I think if we take a look here, let's go back here to Robinhood. Let me bring you here to my most recent contract. We'll go ahead and do a quick search here in TQQQ. And I want you guys just to kind of see what the current share price is, right? So we're at $35.28. I have a contract in which I wrote a cash secured put. It expires not this week, but the following week. And it's currently valued at $18, right? That current value is not what you earned originally. I originally opened that up for $47. You guys will see I very much, like, when it comes to documenting these things correctly, I've got OCD. So already, guys, in the week that I've opened this, I've already earned 61%. I mean, Monday, I might very well just buy to close, lock in that 60+%, and guess what, guys? I'll write another cash secured put. I'll push the date out further and hopefully be able to generate the same type of premium. So that's what I'm going to feature going forward. I know I gave you guys a lot of information today, kind of a long one, but you know, I figure if you guys like, you know, learning about options and hearing about options and learning about premium and seeing the premium that I'm losing, that I'm earning, then you guys don't mind the length. You guys can always skip ahead. Let's go ahead and give you guys here a recap. So far, And spoiler alert, this is not even taking into account the options that I have sold in my Roth IRA. I'm going to go ahead and save that for the Race to 100 update. Guys, one thing I want to point out, I think you guys are going to be pleasantly surprised when you see the moves and the money that I have made since entering this Race to 100 contract. And you got to remember, guys, I'm only playing with $6,500. I don't have tens of thousands of dollars in my Roth IRA account. And I am even blown away at the progress that I've been able to make. So make sure you guys are staying tuned. I think I'm going to push that out closer to the end of the month. That's going to be a separate stat than what you guys see here for the options, but not too bad. $17,122. We now have TQQQ incorporated as a wheel stock. Oh, I didn't get you guys the update on SoFi. Let me do that real quick. I know you guys are like, Wayne, you were leaving, now you're staying. I just kind of want to point out, last week I opened a series of 3 covered calls. I made $7, $7, and $4. One of the things that I'm experimenting with this week is selling covered calls where the expiration date is going to be staggered. So notice here that I sold a covered call that expires on the 2nd and I earned $10. And then I turned around and I sold a covered call on the 9th. I earned $16. Now I didn't do that for the last one, but I do think that's something I'm going to do. Remember, when you choose a strike price and a further out date, you're going to see an increase in premium. So I kind of want to test the waters on that. But guys, I am very, very happy. Yes, I am currently down in my SoFi position, not by much. Yes, I earn 300. I own 300 shares. My cost basis is $550 per 100. That's a total of $1,650 that I have as collateral. But guys, I've made $172. That's not counting the capital appreciation that I made on those earlier transactions. So you take 172 plus $45. We're well over 200 bucks here for this SoFi endeavor. Like I said, guys, I would rather much make $6, $7, $8 from SoFi than lose $500 like I did from AVGO. And with that, it's a wrap. We'll see you guys on the next one. Take care.